हेलो डियर स्टूडेंट्स, वेलकम टू द स्टेनोवर्स। उम्मीद है कि आप सब अपनी डिक्टेशन प्रैक्टिस अच्छे से कर रहे होंगे और लिखते वक्त आपको ज़्यादा दिक्कत नहीं आ रही होगी। आप सबका फीडबैक मेरे लिए बहुत वैल्यूबल है। ज़रूर बताते रहिए कि आपको डिक्टेशन कैसा लग रहा है। मैं अपनी तरफ से पूरी कोशिश करता रहूँगा कि आपको हर पॉसिबल तरह से सपोर्ट कर सकूँ। मैं जानता हूँ कि आप शॉर्ट हैंड प्रैक्टिस में किन किन वर्ड्स पर अटक सकते हैं, इसलिए मैं पहले से ही उन हार्ड वर्ड्स को हाईलाइट कर देता हूँ और उनकी आउटलाइंस भी प्रोवाइड करता हूँ, ताकि डिक्टेशन लिखते वक्त आपको कोई प्रॉब्लम ना हो और आप कॉन्फिडेंटली लिख सकें। जैसे कि मैंने पिछले वीडियो में भी कहा था, डिक्टेशन स्टार्ट करने से पहले वीडियो को पॉज करके उन हार्ड वर्ड्स की प्रैक्टिस जरूर करिएगा, फिर आगे डिक्टेशन लीजिए। इससे आपका फ्लो भी मेंटेन रहेगा और स्पीड भी ग्रेजुअली इंप्रूव होगी। और हाँ, आप सब पे मुझे पूरा भरोसा है कि आप चैनल को सब्सक्राइब, वीडियो को लाइक जरूर करते रहेंगे। और चलिए अब बढ़ते हैं आज के वर्ड्स की तरफ। सो स्टार्ट द वर्ड्स। फाइनेंशियल ईयर, एस्टिमेट्स, फ्लेटिंग, रीएश्योरेंस, पॉलिसी मेकर्स, मैन्युफैक्चरिंग, कंजम्पशन, एक्सपेंडिचर, हेडविंड्स, क्वार्टर्स, tariffs, inflation, deflator, reportedly, mechanically, underscores, diversifies, monetary policy committee, construction, infrastructure, categories, repo rate, higher skill, employment, optimism, concentrated, flashing, sustained. Get ready for a General Matter Dictation test at 85 words per minute. This matter contains 425 words. Please be prepared to begin the dictation in 5 seconds. Ready? Start. India's September quarter GDP data for the current financial year beat all estimates, coming in at 8.2%, higher than 7.8% in FY26 and well above the year ago period. Stop. This offers fleeting reassurance to policymakers, days after October's trade data revealed a historic deficit of $41.68 billion, driven partly by a tripling of bullion imports, a signal of economic uncertainty. Stop. Growth has been led by manufacturing 9.1% and services 9.2%, supported by a recovery in private consumption. Stop. Private final consumption expenditure grew 7.9% in FY26, compared with 6.4% in FY25, while government spending also provided a modest boost. Stop. Together, these suggest a broad-based uptick in domestic activity despite global headwinds. Stop. Yet, the full effects of the external shock may surface in the quarters ahead. Stop. The US's two-stage India tariffs, in August, landed mid-quarter. Stop. Some front loading of export orders ahead of these tariffs may also have inflated output. Stop. A second statistical effect is at play. Stop. Retail inflation fell to 0.25% in October, the lowest in the current CPI series, contributing to a GDP deflator reportedly below 1%. Stop. A deflator this low mechanically inflates real GDP relative to nominal, the narrow gap between nominal GDP 8.7% and real GDP 8.2% underscores this. Stop. Should inflation rise or input costs firm up if oil prices climb as India diversifies away from Russian crude, headline GDP growth may moderate. Stop. The RBI's upcoming Monetary Policy Committee meeting adds uncertainty, as any policy rate will shape demand side pressures. Stop. New paragraph. The gross value added breakdown shows construction growing 7.2%, and the services sub-segment of financial, real estate, and professional services rising 10.2%, indicating that capital-intensive, infrastructure-linked sectors have been central to this momentum. Stop. Monthly industrial indicators reinforce this pattern. Semicolon. The IIP rose 4% in September, with core capital intensive categories such as steel 14.1% and cement 5.3%, recording strong gains. Stop. This aligns with the impact of the RBI's three repo rate cuts this year, which lowered the policy rate to 5.5% in June and may have supported investment activity. Stop. Crucially, the composition of growth remains skewed. Stop. The quarter's expansion has been driven by capital intensive and higher skill sectors, banking and technology, while high employment, labor absorbing sectors continue to lag. Stop. IIP data for the past 6 months also point to weak rural consumption. Stop. There is, therefore, reason for cautious optimism. Stop. But the September quarter growth spurt appears concentrated in better paying formal sectors, even as low income, export linked, labor intensive segments struggle. Stop. With September and October trade data already flashing warning signs, it might be too early to conclude that this pace of growth could be sustained. Stop.